Hello traders and welcome to another video review. Today is Tuesday, March 22nd, 2022. Let's start as usual with the Forex calendar. What do we have here? Well, London session looks pretty much eventless. We got only public sector net borrowing data from the UK published already. 12.3 billion pound is the actual reading of the public sector net borrowing, which beats the forecast of 8.5 billion, and it's way better than minus 7.8 billion the previous reading. So the UK administration is borrowing very well this month. Current account of the Eurozone is scheduled for release at 10 o'clock in about 1 hour, and there is another increase from the current situation, 22 billion of euro. It was the previous reading. The forecast is 24.3 billion euro, and that's about it. If we are talking about the London session, New York session looks a little bit more busy. We got data from the Canada Industrial Production Price Index, Raw Material Price Index, and that's about it. All of this data is scheduled for release 1:30. And of course, we got the data from the US Richmond Fed Manufacturing Index, scheduled for release at 3 o'clock, and 3:35. FOMC member John Williams will give a speech. But it looks like the main event of the day is the Swiss National Bank Chairman Thomas Jordan speech that is scheduled at 4:15. We got more speeches today. Bank of England Deputy Governor for Financial Stability John Caniff will give a speech 4:15, and the annual budget from the Canada is scheduled for release at 9 o'clock sharp. At the end of the day, we got a few words from FOMC member Loretta Mester. So it looks like a pretty much uneventful day. Some speeches are here, but it looks like the main event is the speech from the SNB chairman Thomas Jordan. We will take a look at the Swiss franc. However, let's start our analysis with the Canadian dollar. Daily time frame chart of the Canadian dollar looks pretty much rangeful, because we got the rejection of the level of 1.2896. This level had been tested 3 times already. We got a marginal breakout towards 1.2897. The high was made at 1.29 sharp. Then we got the bearish engulfing pattern, so this level had been rejected, and of course another attempt, and we are going towards the lower levels of the zone. The recent low was made at 1.2564, and it looks like the bears are getting ready to break out downside towards this lows from the middle of the January 2022, around the level of 1.2450. So it looks like a Canadian dollar is getting weaker, and after look at this, after few tries to break above 1.28, 1.29, basically 1.30 level on a daily time frame chart during the period of the last year. This is the August of the last year. Then we got another one in September, and then of course at the beginning of the 2021. All of these attempts were of course rejected, so it looks like we might be soon continuing this downtrend here, and we can treat this period of time here and that price action as the correction to the upside. So please, all of you who trade the Canadian dollar, please be careful, because it looks like the bears are still intensify the pressure, and we should see more bearish action very soon. Let's take a look at the Swiss franc in form of the US dollar to the Swiss franc daily chart. daily time frame chart of the US dollar to the Swiss franc looks very promising for bulls, because we got a breakout above the range. The upper level was 9,367 pips, and right now we are breaking higher. If I'm not a little bit ahead of myself, it looks like this is a top range of the overall corrective move to the upside. There you go. You have a 9,475, which is the high of the previous all the way 5, and this is the technical of course resistance. But however, as soon as we hit this level, the market reversed, mostly because it was in the very extremely overbought conditions. And the other thing is that there of course is technical resistance and the upper channel line. So we got this pattern here, looks like a pin bar to me, and we got of course the rejection with the high around the level of 9,459 pips. Then we have the confirmation down move towards the technical support. We will change the color now. Technical support is at 9,295. we get a bounce, but the old technical resistance at 9,377 is still holding the line. So it looks like we are going back to the channel. We are going back to the middle of the channel, and the range continues. However, please take a look at this channel once again, and we can clearly see that we have a lower, we have the higher highs, okay, and we have the higher lows so far. So this looks like a corrective channel to the upside, because this price action is definitely not impulsive price action. So don't be very it looks promising, but please don't be very bullish on that structure here. It's still rather corrective situation than the impulsive situation here on this chart. Let me just adjust the levels. I would like to combine these levels with the previous highs. There you go. We got the high to be to the point somewhere here. So we didn't even touch this high, and there is no breakout, there is no rally to the upside. It looks pretty much corrective to me. Maybe some kind of a complex and time consuming correction is being developed here. However, the main trend on the US dollar to the Swiss franc is still down, with the occasional spikes up and down. So that's definitely not a beginning of the new uptrend on the US dollar to the Swiss franc. It looks pretty much corrective, and if we break out of this ascending channel, then of course we should expect a test of a 9,000 pips level. To be more precise, it's exactly 8,915 pips level. So that's the key technical support for the US dollar to the Swiss franc. So that's about it. Let's take a look at the gold market. What is gold doing? And then of course we will take a look at another market as well. Gold is coming off the highs. You can see it pretty much easily here. Last high made in 2020 with the top at $2,074 per ounce of gold has been just a little bit approached, just a little bit hit. However, there's still around $20 missing towards this high, and since then we have a clear reversal pattern from the extremely overbought market conditions. So let's take a look a little bit here. We got bearish engulfing pattern on the daily time frame chart. Very clear clear show of the strength of the bears selling everything above $2,000 per ounce. Short-term trend line violated. Now we got this zone here between 1,958 1,973 as the supply zone, of course, and the three levels of the technical resistance. We have made a new local low at 1,894. It looks like a pin bar to me, so maybe there will be some kind of a reaction to the upside. However, the momentum is almost flat around the level of 50 on the RSI, which means this is the neutral level. Neither bulls nor bears are in charge of this market. However, in the background, we have a strong bullish move to the upside. Right now, let me just put some Fibonacci for you guys, and I think this might be good example of a correction here. Let me just a little bit, there you go. This is around, yeah, 61% has been retraced already, so that's a pretty much corrective movement here to the 61% level. 1892 is the level, so we can clearly see this move to the downside is corrective in nature, and we should see more upside soon if the bearish pressure will decrease and the bullish efforts will intensify. Key short-term zone between 1958 1973. Please watch this zone for potential breakout again to the upside on gold. And last but not least, let's take a look at crude oil. Current month contract. There you go, ABC pattern to the downside. This is a three-wave corrective decline as predicted. So right now it's completed, so ABC is done. We have, after the wave C had been completed, we have a bounce to the upside. Let's see how much we have retraced. I think it will be around 61%. There you go, 61%, almost to the pip. 116.37 is the level of the 61% retracement. We have made a high at 115.13, so there's still some levels. There's still some room for the bulls to rally. However, it's very tight, not even $1. We are right now just between two technical resistance levels, 112 and 115, and we got a pin bar building up here. So if we continue to move lower, we got a pretty much kind of a maybe even shooting star, or maybe some other pattern. It's hard to say right now because the daily time frame chart has not been completed yet, the daily candle as well. So we got the new local lows right now. 111 local low was made, so it looks pretty bearish right now after this technical resistance at 115 had not been violated. So it looks like the bears are right now in charge of this market, maybe only temporary. However, we need a breakout below 95.16 in order to see lower levels for the crude oil. And as you can see, this rally on the crude oil was very exhausting for bulls recently, and we should go towards the previous wave 4 zone around $84 soon. So it looks like market is pricing in a possibility of another decline lower after this rally here fails to break 61% of the Fibonacci retracement. Very interesting situation. Maybe we will not see higher levels of the crude oil at all in this quarter. So let's take a look at some cryptocurrency at the end. Let's take a look at Bitcoin. What is Bitcoin doing? Well, not much. Not much because it's still inside of the range. This channel is too old right now, so I'm deleting it. And as you can see, the main zone here on the Bitcoin is still between $44,409 and $45,811. So that's the main supply zone, main technical resistance, and that zone has not been cleared yet. The Bitcoin tries to bounce from the sub $40,000 levels, bouncing, but it's not going anywhere, despite the fact that the momentum is pretty much positive. However, not that strong. 57 points only for the RSI is not really a big deal yet. We are waiting for the breakout to the upside on the Bitcoin above 45,811. Right now we are just back inside the congestion zone. This is like a trading zone with which gives you basically no information about the further move of the bulls or bears, because it's still inside of this tight range here. Even in a bigger picture, it doesn't look like a rally. It looks more like a consolidation. It looks like a trendless market right now. However, it has a potential to break above the supply zone and move towards the $50,000 as long as it trades above these two levels here, 52,905 and 54,290. Those are two main technical supports for the Bitcoin for now. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.